Hi, this is Dan Joseph with the China Learning Curve. Welcome to our video newsletter for June 2015. The economy is still weak, plus the stock market is falling, for now. Will China pile on the debt to try to keep things moving? Between the recent hacking incident and tensions in the South China Sea, can U.S.-Sino relations stay on an even keel? These are probably the biggest questions arising from events in June. As always, we'll do a quick review of each of these stories, plus a review of a few other noteworthy events. Let's start with the economy. Recent economic indicators have continued to show weakness in the Chinese economy, with the most significant point being that at this time it is still difficult to know if growth has hit bottom and will start rebounding, or if deceleration will continue. Adding to the intrigue is the stock market, which fell about 20% over the last 2 weeks of June. Keep in mind, even after that 20% correction, the market is still up roughly 100% over the last 12 months. Also note that the amount of margin buying in the Chinese market is roughly 5 times as high as it was a year ago. So we have a leveraged economy that is decelerating, and a leveraged market that seems to be running out of steam. It would be easy to conclude that a collapse of both is right around the corner. We're not sure we'd bet on that. Certainly the market can't go up forever, and the fundamentals suggest it is already too high. A serious market correction is likely. But that doesn't necessarily mean the economy will collapse. A gradual adjustment to a slower growth rate is still the most likely outcome, and this isn't exactly a bad thing for China. In our view, the risk is that China might overstimulate the economy and end up exacerbating its debt problem. Late in June, after the stock market had a particularly bad day, the central bank announced another round of cuts in the interest rate and reserve requirement ratios for banks. Combined with earlier announcements relative to bank support for local borrowing, the government seems to be signaling a greater willingness to increase debt to support growth, a strategy that is not without risk. As we've been saying all year, the theme for China's economy in 2015 is how will the government balance debt and growth? We continue to hope that China takes a prudent approach to debt to avoid a larger problem down the road. We will continue to keep our eye on this issue, as we aren't sure prudence is the best way to describe the approach China is taking. In our law and politics section, a few quick stories. First, Hong Kong voted down China's proposal relative to electing a chief executive. This is the same issue that led to the demonstrations in Hong Kong last year, and this result is not a surprise, although the way it happened was kind of awkward and unusual. Anyway, China is unlikely to change its position, so that standoff will continue. We also have a brief story on the draft of a new law relative to NGOs, non-governmental organizations, which includes not only philanthropic groups, but also industry groups that represent lobby for particular industries. The new law would put NGOs under close supervision by China's Public Security Bureau, a position that will likely make it difficult for these organizations to operate. This is part of China's broader political clampdown. Foreign governments and the NGOs are pushing back, trying to get the draft law changed. It will be interesting and important to see if China shows any flexibility on this issue. Lastly, we have two other stories, both relating to foreign relations, particularly U.S.-Sino relations. First and foremost was the hack of America's Office of Personnel Management that commanded so much attention in June. Hacks are notoriously difficult to trace, and victims are always reluctant to release information. But by the end of June, we seem to have learned the following. The hacker stole information related to at least 4 million government workers and maybe as many as 32 million current and former government employees. At the very least, basic background information like social security numbers and addresses were stolen. It also seems likely that deeper and more valuable information, like that which is collected when doing security clearances, was also stolen. By the end of the month, America's Director of National Intelligence was saying that they are highly confident the hack originated in China. Now, the most interesting perspective on the hack was offered by retired General Michael Hayden, who was also formerly chief of both the CIA and the NSA in the U.S. Hayden said the stolen records were a legitimate foreign intelligence target. He also said that he would have done the same to the Chinese if he had the opportunity. Finally, he said, and I quote, "This is not shame on China. This is shame on us for not protecting that kind of information." Hayden makes a great point. America has close economic ties with China, but China and the U.S. aren't close allies, at least not yet. We know that in certain areas, like economics, the two countries have a cooperative relationship. But in other spheres, there exists a more confrontational relationship. America has to be prepared to live with that contradiction for a while, and it has to protect its own interests along the way. Lastly, we have the South China Sea situation. In mid-June, some thought China signaled that after it finishes its current projects, it would halt, at least temporarily, the building of more islands, although it would continue to build facilities on the islands it has already constructed. Later in June, there were reports that China's island building is continuing. Will China, in fact, halt its South China Sea island work? Time will tell. The key variable at this point is the upcoming meeting in September between the presidents of China and the U.S. It is possible China will try to cool down the South China Sea tensions before that meeting to make for a smoother dialogue. Even if China backs off the South China Sea in the short term, that doesn't mean it will change its long-term plan. Meanwhile, nations in the region are stepping up their alliances and their purchases of military equipment, and the U.S. remains committed to standing by its allies. So this issue, even if it calms down for a while, is far from settled. That's it for this month's video newsletter. For more details and other stories, please see the written version of the newsletter on our website. This is Dan Joseph for the China Learning Curve. Remember, give us 15 minutes a month. We'll keep you up to date on China. Thanks for watching.